Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Tuesday, June 23rd, 2020. We'll take a look at, start out with the broad markets, very brief, really going nowhere for the last week or so here, so I'm not going to spend more than a minute on the broad markets this one, but just start out there. Roll into some of the various asset classes that I've been highlighting recently, and even back up a few weeks to a couple months to some things I highlighted before that may be poised for another move. That's cannabis stocks, so we're going to go through in this order. Broad markets, cannabis, Bitcoin, and my Bitcoin proxies, which are Riot, Overstock, a couple others that tend to move with Bitcoin. Those were highlighted recently. We'll look at crude oil, natural gas. Another update there I think is warranted. Gold, silver, but that's actually where, at least near term, that's where we've had some pretty objective entries, and they're trading well to the technicals, so we're going to touch on that. And we'll look at a few, not all, but a few of the ag commodities, the ones that stand out right now as of this time, as of today, that is, with any technically significant events. And a couple more as well, some that I haven't mentioned. And then finally, time permitting, maybe one or two individual stock trade ideas. Okay, so the broad market, as I just said, there's our sell signals, island cluster, top gap down, bounced right above all these key moving averages down here in that key support level, the top of that multi-month trading range, and we've been grinding sideways since. So we haven't gone any higher, haven't gone any lower for the past over a week now. Each of these are daily candles. What's interesting to note too, you can see the breakdown there on the 60-minute chart. Let me go to this board here. Let me zoom in a little tighter. All right, here's the recent top. This line here I'm dragging around, that's a Fibonacci retracement tool. So if you measure from the top there, the recent high, that's not the all-time high, that's just the June high. Remember, the broad market, the S&P 500 is still well off its all-time highs from back in February. So if I put a Fibonacci retracement drawing tool there down to the drop after that sell signal, that was last Monday the 15th, you can see that we've retraced 61.8, and that's pretty much what's capped this rally so far. And it's also gap resistance. You have a combination of price resistance via the gap right there, and that's 61.8% Fibonacci retracement. So I just want to point that out. So nearly 2/3 of the drop has been retraced, and that is within a typical. If it is a counter trend rally, it's within a typical retracement. I'm going to say this too. Well, no, let me show you the next thing here. I wanted to show you, and then I'll talk one more thing on this. Said I wouldn't talk for over a minute. Probably lied there, but you guys probably knew I would. Anyways, there's one of the Fibonacci drawing, or the same fib drawing I should say, on RSP. RSP is the equal weighted S&P 500 index fund, and as I pointed out just a couple weeks ago, actually the day before we had those sell signals in the market, there was a noticeable deterioration in market internals, market breadth, meaning fewer and fewer stocks, namely the FANGs and technology stocks as a sector, were lifting the market, while the majority of stocks were not participating, or at least not participating to the same extent. And you can see here on RSP, whereas right now the S&P 500 itself, the SPY, which we used as a proxy, is at the 61.8. I should make mention, here's where those levels are over here. This is where SPY is right now, and here's RSP, the equal weighted, at just below the 38.2 Fibonacci retracement. Now it did retrace initially on that first thrust up. It got to almost to that 61.8 fib, but at this point it's lagging. So what this is deterioration in market breadth. Same story. I know because I watch them every day. It's Apple, Facebook, Amazon, Microsoft. There are others, but what this is showing you is we're starting to see many other stocks roll over since that initial snapback, while the top heavy FANGs and tech take bring the SPY back to where it was on the initial bounce. Anyway, something I thought worth pointing out is that a sell signal? No. And in fact, what I wanted to loop back to is, after such a powerful sell signal, this isn't the ideal scenario. Now those sell signals are still intact because we didn't take them out, as I said, but ideally, for a sell signal like that, kickback rally is normal, but then you want to see continuation of the downtrend. We're moving sideways. So here's a market that pretty much refuses to go down. It's not going up, at least for the past few weeks. It's going sideways, but it's not going down either. And as I said yesterday, because of that, despite the recent sell signals, my convictions aren't as high right now. Now that could all change. If this market starts to do something different, my convictions may strengthen on a considerable, another big leg down to come. I still favor that. I just want to say that I don't favor it where I'd be aggressively short the indexes now. I'm focusing on other opportunities where the risk-reward profile is better, and that's what I'm going to roll into next. So let's do that. Instead, I'd go to the cannabis stocks. It's been a few weeks, probably a couple months since I've really updated those, but a couple months ago I was bullish on those, and these are the ones, or at least most of these I should have went over at the time. I believe I did. And we had Hexo, HEXO, Hexo Corp. It's some of these are indirect proxies or plays on cannabis. Some are more direct proxies. So this is a drug manufacturer in the special generic arena, but I have it in my list because last I checked it was a component. I'm going to modify that trend line. That's what I did there. Either way, broke out, rallied up to that 123 level, stopped there. But here's a common theme on the pot stocks. As I go through these charts, a lot of them had this initial leg up recently. It was a pretty impulsive run, and they've consolidated. It's not a perfect bear flag, but it is taking the form of a consolidation on declining volume, and that's the essence of a bear flag pattern. I'm sorry, bull flag. You have an impulsive leg up, followed by a period of consolidation, a drop down on diminishing volume, followed by a breakout and a resumption of the uptrend. So that is a possibility, and there's been a dash to trash lower quality stocks recently. Now some of these are the market leaders in that sector, and here's another one. ACB, a couple months ago back in May, I pointed it out as a breakout buy signal on this pop there. It ran in just a couple days, it ran up to that 1770 target for better than a 150% return in just a couple days right there. That's over actually from the breakout. It gapped above that trend line, but from where it closed, I mean, this sucker rallied 200% in just two sessions. These two green candles. And point being, it's like a lot of these I'm looking at. At that point in time, I believe I said objective place to book into profits when you get 200% or 100 or 150 in just 2 days. You're overbought, extremely overbought. You're at resistance. Good time to book profits. And it did. It pulled right back, and I just want to point out that it's consolidated and it's held support. This was a resistance level here, and so I'm starting to see some upward movement right now. Nothing big, but they have consolidated for quite a bit to help digest or work off those overbought conditions. PPO is starting to curl back up. It's still in bullish territory. It's above the zero line, this dotted line here, dash line I should say. So that's bullish territory. This is all bearish. And as you can see with that, and I'm looking at the white line, that's what I like to use, the 9 EMA. It's told you this whole time you were in a bear trend, and boom, we had a buy signal right there. So check marks for the bullish case. And again, it's still objective. We're just off that support. It's a support zone. You could go long with a stop below, maybe a partial position, start to get back in. And keep a watch on the sector. I wouldn't just trade one of these stocks in a vacuum. You want to look at most of them together. That's just the HEXTOs, the Toronto shares for those of you in Canada. And if you are Canadian and you want an update on these, just let me know, and I'll be glad to share these charts as well. There's another downtrend line that HEXO has to take out. CGC, another crowd favorite here in the cannabis sector. There's an uptrend line to watch or trade off of. What does that mean? Well, you can go long on pullbacks to that trend line, or you can have a stop a little bit, somewhat below it. When I say a little bit, cannabis stocks can easily and often do move 5, even 10% or more in a day, sometimes 20, 30% or more in a day. And as such, if you're trailing a 1-2% stop loss, you're going to get stopped out in the day-to-day gyration. So when I say just below, everything's relative to the move in these stocks. You don't put the same amount of money into CGC that you put into SPY. You put a smaller position size because your returns are going to be many times larger if you get the trade right, and you need to allow for a wider stop loss in order to stick with a trend because these things are volatile. So therefore, if you take a much smaller or reduced position size, you can allow a 10, even 15% stop, and it's not going to do as much pain as it would if you had a full position size. Or cause you as much pain. So that's it. We already hit that 2240 target. So if we can power up, there's still a lot of resistance here where that inverse head and shoulders pattern kind of developed before. It didn't really play out all the way. But you can see the targets are still listed on this one, potential targets. All right, next one, OGI, Organogram Holdings. That one I believe would have been highlighted back then as a breakout above this trend line and that 151 level. And so far it was good for about a 55% return. It's pulled back, and again, birds of a feather flock together. So if we start to get some upside momentum, these stocks may have another thrust up. And don't get married to them if they don't. If that's it, if that's all we're going to get out of these divergent lows and all the, remember we had one here. They are in a downtrend. They're in a bear market. So I probably should make that very clear. They topped back here in 2019, and this stock in particular, and there have been bear market rallies on these trendline breaks since, and they're very profitable to trade. So I'll love, you give me a bear trend, bull trend, I'll trade it counter trend all day long. As you guys know, a lot of my trades are counter trend trades. That was a 60% rally from the breakout point above that wedge. This one so far, since it was highlighted, just a couple months ago, was good for about the same, 56% right there, according to the measuring tool, and that's that. So a few more, and we'll move on to the next sector. Tilray, TLRY. There were a couple lines I had here. This one we needed to break, and we did. We broke out of the trend line. When you have to almost zoom in to see. It was good for a couple day rally of about 33% from the breakout. That was our breakout candle. It happened during the day, so you could have entered on the break of the trend line, ran up, but it didn't really hit. My first target was up here, I believe, this downtrend line. But here's the thing. This is why I'm doing an update here, because it's worth noting a lot of these stocks are showing me something here. Whether it plays out or not, we broke out. That was a breakout, and it was above this longer-term downtrend line. I had a smaller one there as well. They both were taken out. But this is simply a breakout and a backtest so far, and we're starting to move off after backtesting the trend line for a few days. And the PPO, like some others, is in bullish territory now for the first time in a while. And again, by using the signal line, the 9 EMA, the white line, it's the last of the two to cross, so it helps to filter out whipsaw signals. That orange line is going to move ahead first. And so here was our buy signal, and going back, you can see it's done a really good job. That white line, for the most part, maybe ever so slightly minor whipsaws, was below since back here, telling you this whole time Tilray has been in a bear market since it fell, at least from that one trend indicator at this point right here. So those are the things I'm looking at that are constructive developments in the cannabis sector. TGODF, the Green Organic Dutchman Holdings. That one was highlighted in advance, like most of those, as a breakout above this downtrend line. There was a breakout right there. It was good for, in just 2 days, I'm just measuring up. Here, I'll show you to the point I'm measuring to. About 132%. Rallied to just under that target. I always say in these videos, if I'm covering these as unofficial trade ideas, I can go through a lot more that way. If it doesn't say T1 equals, that is showing you the actual resistance level, and I always advise, or at least I like to take profits a little shy of the actual resistance level, because if it's very obvious to all, like it should have been there, the sellers may step in early, which they did. So for all intents and purposes, that's about first target hit, pulled back. It's been consolidating at or a hair below this level here. And again, same story, PPO's curling back up at the 0 line. We don't have strong momentum yet. There was a little false start there after the first back test. In fact, what I probably should do is, you can see we have support around this level. And so again, one to watch. And you can go long here with a relatively tight stop, maybe a partial position add if it continues to, it starts to move up, especially on increased volume is what you want to see. CRON, Kronos Group, there's your support level and a downtrend line. So again, I'm going, I didn't revisit the old videos. At the bottom of this video, if you click on any of the symbol tags underneath the post, it'll bring you back to all prior coverage of each security you click on. So there'll be a symbol tag, CRON, that'll bring you back there. So I believe I would have probably covered this one back then as a breakout above 623 plus the downtrend line, and I'm referring to this. This is your primary trend line here, and there was your buy signal right there on that candle, that green candle. went almost perfectly to my first target there at 793, 28% gain. We broke out, back tested, offering another objective entry if you missed the breakout, then the 28% gain. And you can see that former resistance level, the breakout point 623, has done a beautiful job of acting as support. So it's TA 101. You either buy breakouts above resistance or you buy pullbacks to support, and you can set your stop a little bit below. Next target would again be another tag of that 793-ish level, and then these other ones if we can get some upside momentum and traction in the sector. Couple more. You always want to keep an eye, of course, on the MJ, which is the one. It was the first to market ETF for the cannabis stocks, so that's what I tend to track. There was our breakout right here, downtrend line breakout, and plus the 1268 resistance level breakout. You're not going to have as much juice on an ETF, meaning the returns, because it's diversified. You have many holdings. Some will hold it back, some will help it out, but it was still good for about a 20% gain since that point. And same story, kind of consolidating. PPOs constructive right now in bullish territory, and I think that is it. I'll just look at a few more here. There's GWPH, been pushing against the 133 level, needs to take that out. Broke this uptrend line and back tested the downtrend line. So there's like cross technical currents here, or technical cross currents, I should say more accurately. You have a downtrend line, which we broke out of and back tested. That's bullish. You have an uptrend line which was taken out, and that's bearish. When you have resistance there, a failure 133 bearish so far, but you'd be looking for a breakout. Should it break 133, that's to me a big level. I think this one could run, but as I like to say, resistance is resistance until unless taken out. So what's not objective is to go long right here just below 133. You either wait for another pullback to support, meaning either those two trend lines or that 110.50 level. And if that happens, how does the sector look at the time? Are these PPOs still in constructive territory? So there's your objective entries, either a pullback to support right around here, somewhere here, or a breakout above resistance like that. CRBP, don't really have that one marked up. CTST, and that's it. All right, let's move on. 17-minute mark in the video. I can cover a few more here. Next one up is Bitcoin. I can use a proxy, Bitcoin futures, and this is my daily chart, 2-year daily chart. As I've mentioned recently, Bitcoin's kind of been slogging around sideways, a lot like the stock market right here for the last couple months. This is that boxed in this range, and solid breakout above or below will most likely determine the next major trend. But right now there isn't a trend. We're chopping and slopping around sideways. We did have a divergent high recently. That last high right there, you can see our negative divergence. Now, and that may mark a lasting top. However, the way the PPO looks to me, it's somewhat constructive. This is flattish divergence. We don't have clean separation there. The PPO looks like it wants to turn back up, or starting to. Needs a little more work above the zero line. The zero line would be right here, where that histogram is. So the PPO is in constructive territory, but again, there's, like I said, kind of cross currents, technical cross currents there. You had the downtrend line breakout and back test, which is holding above, but you also broke down below this uptrend line. So where I'm going with this is I can't make a strong case to buy or sell, but I'd watch it because I went over some of the proxies in the sector, starting with GBTC. If you don't trade futures, here's similar. It's not an ETF, but it's for all intents and purposes, it's the same thing, and it tracks the price of Bitcoin. So here's another proxy to track Bitcoin, and you can see there we had a comparable uptrend line, divergent high, gave us that wedge type pattern, impulsive breakdown right there, but we went down to this support level about 1009. It's pretty decent support, and that's the story on Bitcoin. So if it can power up and take out these recent highs, that would be bullish. It may want to go on and put another divergent high at a higher point, so we'll watch that. However, if it breaks there, that's going to be bearish, and then that brings me up to my next two. Now you could of course have a direct trade on Bitcoin via GBTC or BRR, the futures I just covered, or you can look at some of my proxies like Riot, that tend to trade with Bitcoin. I mentioned Riot as a potential short setup recently with a divergent high here, but needs to break this trend line. We fell down to it. What I'm going to do is just tweak that trend line right now a little bit to come in and catch that reaction low. We overshot it with a little momentum, just as we did back there, and at this point in time, this is going to give us a better fit on that trend line. It's going to come in and capture the body of this red candle, that one. It will capture the body of this one and the shadow, or the skinny part of this one. So there's 3 reactions, several shadows right there, and the body and the shadow right there. And that's how I like to draw my trend lines. The most number of tags, whether it's the body and or one of the shadows or the skinny parts there. So I think it's a valid trend line. So we don't have any sell signals yet. And again, until Bitcoin picks a direction, these guys are probably going to flounder around, but they're what I call trade setups, not actionable trades. OSTK, Overstock, is another one. Yes, they are similar to an Amazon. They're a retailer, but they also have a pretty heavy hand in crypto. You guys can look it up. The owner's fascinated with cryptocurrencies, and some type of crypto exchange or something. I'm really not a big crypto buff. I'll trade the charts if there's a setup. There's also resistance right here around this previous divergent high. There was some there. So that's the story, just like before. The setup is here. We need the catalyst for a breakdown or reversal. Here we had a divergent high, started to go down, pushed up, made a marginal new high, which was an extension of the previous divergence, and then came the big drop, and until all was said and done, it was all the way down here. So that's it. Again, a potential setup. If it continues to work its way higher, we'd still have divergence anytime soon. It looks something like that. Or we go on to breakdown. So keep an eye on this one along with Bitcoin and GBTC, and that'll give you a heads up as to when's the right time to get into this one for the next short trade. If you're bullish on Bitcoin and it does go up and burn through those divergences, then a break above 30. I'm going to round that number off. Solid break above the $30 level should be bullish, because that's pretty decent resistance. It could open the door for a move up. Let me just give you a target if that does happen. Right about there, I would say, yeah, that's a pretty good level. About 42.41 would be your first target, and potentially more. But as of now, with the divergences and overbought conditions, wash, rinse, repeat, simple stuff. I don't, stuff sometimes I try to make it, I don't want to overcomplicate it, and that's what I look for. These divergent highs for tops, overbought conditions, and then I like to look for divergent lows, oversold conditions right there for a rally, and that's what we had. That happened to be a bear market rally, but it was certainly worth trading. It was from top to bottom to top about 45%. So in just a matter of a few weeks there. And here's the other one I mentioned in recent videos. Low price, higher risk. This is a penny stock. HVBTF, Hive blockchain. Trend line right there. It's been walking its way up. And resistance right here. So it's more so a triangle pattern than anything else. If you take that recent high, kind of draw down a trend line like that, draw one like that. And so like everything else, this sucker can break either way. I'm leaning this way, but again, we need a little more evidence in the charts to, and those sell signals to come, breakdowns and confirmation with whatever Bitcoin's doing at the time. All right, next up would be crude oil. I'll look at the futures, and then we'll look at the ETN as well. And really no change since yesterday's update, or very little change, I should say. We had a trend line back here with divergence on the PPO, and as of yesterday, we had also divergence on the PPO only. But as I said, and yesterday, I believe it was yesterday, the day before, that we had some resistance here around these previous reaction highs, and I said if we went took that out with a marginal new high, which we've since done, it would also give us divergence here on the RSI. So now we have negative divergence on both the PPO, the RSI. We have a breakout above the recent highs, but it's not really taken off, then it could prove to be a false breakout. Either way, whether it is or isn't, there aren't any sell signals yet. As I said yesterday, the sell signal will come on a break of this trend line, and right now that does align with that 40-50-ish former resistance, now support. So there's your levels to watch, about 40-50 and the trend line. If they go together, these are your potential targets, any or all of these marked levels here. And like I said, look for the divergent highs, look for the divergent lows, for a change in trend after a downtrend or correction. Okay, for those of you that prefer ETNs over futures, USO would be probably your best bet. As I posted yesterday, one of the big ETN companies will be delisting a lot of or retiring a lot of their ETNs, including TVIX. Was it DWTI or one of the two three-time leveraged long and short? It's like, in the comment thread there, somebody asked, "Hey, what does it mean?" It's like, might as well get out. I see no reason to stay in those. People are going to sell them, knowing that they're going to be delisted. They'll continue to trade, or may or may. They usually do over the counter market, but again, liquidity dries up, and there's no reason I can think of to stay in any of those positions or to enter new trades in those. So, again, this is the financial system. A lot of things broke back in the big drop that we had into the March lows, and a lot of ETFs broke immediately at that point, and others, somewhat afterwards. So those were some of the casualties of it. And I take that back. I just looked at my post from yesterday. It was the natural gas ones, UGAS and DGAS, as well as UGLD. Again, visit yesterday's post. It's at the bottom of that, the one titled Stock Market, Gold, and Commodity Analysis 62220. The bottom of that, so it's UGold, USLV, which are the three-time long gold and silver, then DGLD, that's the three-time bearish gold, DSLV, that's three-time. Here, I'm going to type them in. Why don't I just do that for you? Silver, UGAS, which has always been a crowd favorite for ETN traders that like to trade natural gas. This one will be retired. DGAS, same thing. We've had many trades on these in the past, but when everything started to break back a few months ago, I said, hey, really trade the three-time leverage things with the be careful. If possible, just use the non-leverage ones, or maybe the two-time leverage. But I just want to show you what's being retired. ZIV, I never really dealt with that one much, but some medium-term VIX ETN, VIXX, and then of course TVIX, which has been used here in the past. And you can see it's really going down. The VIX is going down because of the market, but TVIX has dropped more. Here, let me just measure it out for you. So for the last few days, and TVIX is two-time leveraged, and remember, they track futures. I get this a lot. These guys track all VIX ETNs track VIX futures, not the spot VIX. It always confuses people. They don't understand why the VIX might be up 3% or 5% one day and TVIX is actually down or up more or less. It's not the same. Nothing. There's no vehicle out there that tracks the VIX. You cannot buy or sell the VIX directly. But this is the VIX, VIX, VIX volatility, CBOE market volatility index. This is the VIX. And it is again, an index that you can buy and sell futures on. You can buy and sell options on those futures, and they have, just like stock futures, you have them in various months. You have near term, intermediate, and longer term, several months out. Then the ETNs will track different futures. So TVIX, for example, tracks the near month, the short term VIX futures. And again, it's being retired, so probably time to move on and find a different vehicle if you like trading volatility. And other casualties were, DWTI, which I think has been retired since. We have DW, where is it? DWTI. There's a couple of them out there. I like, especially with everything that's gone on recently, I'd stay away from these. I like to trade the futures, but DWTI, DWT, there's one right there. That's what I was looking for. You can see this one stop trading right here after the 31st. See all these, turn off all the lines, meaning it's no longer traded. So a lot of these blew up, and even those that didn't completely blow up, here's a great example. For years, on this site, we've had many trades on Dust and Nugget. I usually use GDX as the proxy and the official trade idea. This is a gold mining ETF, but a lot of people like to use the leverage, and for many years. And they still can be good short-term trading vehicles. You had Nugget and Dust. Now, Nugget and Dust used to be three-time leverage, 300% leverage until recently. When everything started blowing up, these ETF companies said, hey, are these business model these models that these are constructed with, the cost of when volatility surges, the VIX surges, the cost of using that leverage increases. Puts were skyrocketing. All option premiums, volatility premiums were skyrocketing. And again, I don't know all the complexities of how these work. I do know they use leverage obviously to get these returns. But here's what I'm getting at here. It was a kick in the you know what to holders of those ETFs, because if you were long Dust or Nugget, and during this big drop here, let's just say you were bullish on the miners, everything was in meltdown mode into the March lows, but from there they bottom, and you can see GDX is well above where it was before the drop. Here's our February highs right here on GDX, and it's well above there. It's been a strong recovery in the gold mining stocks, right? Because gold's been going up. So you would think Nugget should be way up as well, right? Well, wrong. What happened is the company decided at some point here to change the rules to all the holders. So whereas you would have had a phenomenal return with 300% leverage on that strong move up, and they left it there, you lost. They let you lose, 3 times what GDX was dropping or more during that, and then they changed it to a 2-time leverage. They reduced the leverage factor, so you were basically had no way to make back all your losses there. So that's these. Again, what I'm trying to do here is just highlight the risks in these 3-time ETFs. And for many years they worked fine, but it was that surge in volatility we had recently. It pretty much broke a lot of these ETNs and ETFs. Some of them went away for good, and others like this had to change their model. And again, these are never good for buy and hold instruments. That I've always maintained. You want to catch trends with these. The leverage can actually work in your favor if you're in a unidirectional trend, meaning if you're short the miners on a big drop or long on a pretty steady rally, but you don't want to hold them during sideways consolidations, and especially when they're going against your position, when you're holding them in the the wrong direction. All right, back to where I was. That's important stuff, I think, and I just wanted to point that out again for any of you that might be in any of those ETNs that are going to be retired now from Credit Suisse. Which now brings me back to where we started. USO, it is an ETN, but they don't use leverage, so it's going to attempt to track the price of crude dollar for dollar. Doesn't do a perfect job as most ETNs, but it does a decent job. And bigger picture is we have this big gap. It's stalling out with on the daily time frame. I've highlighted this recently. And on the 60-minute chart, you have divergent high, a little breakdown there. You just look for, we're in an uptrend. Crude has been for a while. But it's at pretty significant resistance on the daily time frame. So I think there's a potential for a larger swing trade. What I mean by that is these were just corrections or counter trend trades. Your sell signals came on the breakdown below these uptrend lines here, and this is the next one pending right here. A break of this trend line. We're also at resistance about 29.23. That's that previous reaction high. We don't have divergence. I'm going to note that, but again, divergence is not an absolute necessity. But we do have divergence on CL crude futures. That's what I want to get to. CL, which I think I already cover this today. Yeah, I think I might have. Yeah, the divergent lows. That's it. I already went over that. 40.51 trendline break. That's your sell signal potential targets. Next up, let's keep it on something related. That would be natural gas. Since the last update on NG, they rolled. Would have been the July. So the price levels are going to be different. This charting platform will retire the charts. They stopped feeding the charts on the continuous contract when they roll to the next one. So now the continuous they're showing is the August contract. And all that means is this wedge is exactly the same. The downtrend line, I highlighted NG as a potential long pending a breakout above the trend line there and price resistance. So I've made that into a resistance zone. The numbers change because we rolled to the August contract instead of the July, but it's about 1786 up to about 1804, more of a resistance zone. And since that last update in the video, we went up, made a tag, and now we have another reaction. We had a reversal off there. So there was no buy signal triggered, but what it did do is give us a validation of the trend line. So I'm going to give it a check mark for the trend line, meaning that we had at the time only a couple reactions here and here. Now we have 3. In my book, it takes 3 reactions, 3 distinct reactions, separated, in time, to validate a trend line, because any 2 points can be connected at random. So I wouldn't say that's a trend line. I'd say that's just 2 points connected at random, and there was no other point along that line. So this now is a valid trend line. Again, that's just the way I do it. I don't know if that's in the textbooks, but so now we have that reaction, and the divergences that were in place before have only been extended. This low is a new divergent low. You can see the positive or bullish divergence is extending, and so both crude and natural gas are both setups, one of them being a short setup and one being a long setup, with pending an objective entry. Gold, I continue to do frequent updates here because there's just a lot, going on in the charts, and it's playing out very well to the technicals. Remember, we had this downtrend line the other day. It all started out with the divergent low back here. We've been rallying since back, a little whipsaw out of this big multi-month trading range right here, and then it was posted yesterday as another objective long entry here on a pullback to 1756.50. We had a first buy signal was a breakout of the trend line, or most recently. Then we went above that 1756.48, back tested it yesterday, back tested it again a few times, including earlier today, giving you multiple chances or objective long entries, and it's since been moving off. We're a little shy of the top of that zone. That's a very technically significant level. If we can make a solid break above that, that should be bullish. Otherwise, like I always like to say, resistance is resistance until unless taken out. And let's look at silver real quick. Silver, beautiful, again, just trading very well to the technicals. These aren't just random levels. They were all here in advance. The downtrend line right there, which we broke out back test. That was your buy signal. Pulled back tested it right here, and at the same time we back tested the downtrend line, we back tested this uptrend line, or tested it, I should say, from above, and we also tested the 17,736. So triple support. Doesn't get any more objective than that to step in on not just one, not two, but 3 different support levels. And the way I see it, that was the way I think of technical analysis. If someone missed this trend line, they might have been watching this level, and the other guy or gal might have been watching this uptrend line. So the more support resistance levels you have, or the more obvious they are to all eyes, the more chance you're going to have buyers step in on pullbacks to those levels. And it's also good level to put a stop. If it took that out or takes it out, that's triple resistance or triple support being taken out. Now, since I posted, it's kind of stalled out right here. Why is that? Again, you would say, well, there is a little resistance above those 2 reaction highs right there. It certainly has to take out, and we're a little shy of that. But it's more so, in my opinion, about the dollar. Earlier today, I posted the dollar. Back here, it was bullish, looking for a breakout, which we got right here. We broke out, had that rally up to that 97,585 target, was laid out in advance, but when we got there, we put in a divergent high. So just like the catalyst for this rally here was the positive or bullish divergence right there at the low, then with the buy signal right there, the breakout, well, then you set up in a bearish rising wedge pattern with the dollar at resistance. That was your first objective short entry there. It wasn't a sell signal, but it was an objective short because you rallied into resistance with negative divergence and overbought conditions. So that played out for a reversal. There was a sell signal, break of the trend line. Next sell signal came after we broke $97 at support level. We flirted on it for a while. There's a reaction on that level. Reaction to me means either a bounce off of support level when you fall to it, or a consolidation. And that's what we had. We had a reaction mostly in the form of a consolidation. There was a little bit of a bounce. And then once they couldn't hold, once 97 went with conviction, it was a pretty straight, almost a straight drop down to my next target there, 96,411, and that's where we were this morning. And I said, the chances are we could probably get a reaction here. They're certainly elevated, and that's what we've had. So far, it's not much of a bounce. You can zoom in real tight. It's more so a consolidation at this point, but most importantly, support held. And if you're new to my analysis, and you're saying, no, look, we went a little bit above it. That's normal. That is what I call momentum fueled overshoot. Number one, you had a lot of downside momentum going into the move down there. And number two, the 60-minute candle closed back above there. This is a 60-minute time frame. The most important thing is how the 60-minute candles close. A solid break below and close below there would have been a breakdown. That's just an intra-period little whipsaw to close right back above, on or above that support. So that's it. Dollar either bounces. If it bounces, your next objective short entry would be either a bounce back to about, although 97 is a level I can see some, it's more of a support zone now. I'd say about 96, 92.6 up to about 97 and change. Or you wait for a breakdown here. This would be bullish for gold because it means the dollar would continue to fall. And if we bounce up here, that would be, doesn't necessarily mean gold and silver will drop. They could. I'm going to say it's net bearish for them, but it's not a very big drop, so sometimes those two could hold up. But at the end of the day, at least it's a headwind for gold. A headwind is something that may slow something down. So ideally you want to see a falling dollar when you are long or bullish gold or silver. And likewise, I've been highlighting the euro quite a bit recently because the euro is the biggest component of the dollar index, and so part of the catalyst for the recent rally in gold and silver was this breakout. It was, first of all, this divergent low right here. That's what I'm highlighting, positive divergence, just like we had a divergent high back here. That was the catalyst for the trend change and reversal to this downtrend. This downtrend ended with a divergent low at support with a reversal, and right now I'm going to add a trend line for you to watch. So what happened here is, and again, it is not random coincidence, at the same time the US dollar fell to my support level there, the euro rallied into resistance at 113.61. Remember, a rising euro means a falling dollar, and so therefore rising euro typically equates to is bullish for gold and silver. And so the fact that we hit resistance where a reaction was likely, and that's what we got. There's a reaction or reversal off that level. That's what's kind of put the brakes on the rally in gold and silver so far today. So look for a pullback to this trend line. If the euro can power up and then hold that trend line, bounce off it, and break above that recent high, that would be bullish. Otherwise, a break of that trend line, then you have this 113 support to contend with there. So, and that may also impact crude as well, because crude tends to be a dollar-sensitive asset. And to just wrap this video up, a few other things to keep an eye on. KC coffee futures, nice big trend line right here that it's testing right now. We haven't clearly taken it out, and that's because the trend line, just above the trend line, was price resistance, was and still is about 98.81. If it can power on through here, that would be a breakout, and this would be your first and then second targets. JO is the ETN for coffee, and for the sake of time, I'm going to just skip on to the next futures contract, because these are really the pure plays here, these futures. If you want to know where these commodities are going, you can trade the ETNs. On coffee, it's JO. For wheat, it's WEAT. Just drop the H, and these are wheat futures. And wheat futures need to, and they're trying, but not with conviction yet, to break above that we'll call it 490 level. There's a big old gap right there. We took out the downtrend line, so wheat could run if it can power up a little bit more. Like I said, I'm a little suspect. It is a breakout, but barely. We're right on that level. You can see we're at 490 right now. So a little more work to be done on wheat. And a couple that I haven't mentioned to you recently are LE. LE are live cattle futures. And whereas we were looking at intraday charts before, those were either hourly or 2-hour candles. This is a daily chart, daily candles. And here's a downtrend line. And after this divergent low, we had a rally in live cattle futures, and they're testing this downtrend line. If they can pop it, they can run up here and potentially all the way up here. And I'm going to show you one more. It's related because there's an ETN that combines both live cattle futures as well as lean hogs, which are the symbol HE. These are lean hogs right here. And they also are at downtrend line resistance and with a divergent low. This is an hourly chart, by the way, not a daily. And simple stuff. You can watch, rinse, repeat. Look for these divergent highs after an extended uptrend to signal a trend change is coming, and which is what you got. In fact, we're still in that downtrend since then. And then when you've been in a downtrend, you want to start looking out for those, I didn't draw that well, those divergent lows right there. And again, a divergent low is not a buy signal, but a break of a trend line after divergent low would be. So that's what we're watching. And I will look at that ETF because you can kill two birds in one stone by buying or going long cow. Cow is comprised of live cattle and lean hog futures. So that's what's made up, just those two. And you can see a comparable downtrend line here on the daily chart as the PPO wants to, it looks like it's poised to curl back up. A lot of volume coming into this one lately too. It's hard to really make heads or tails. It's not a selling climax because I don't see a big drop off, and we're not moving up yet, but you can see those volume bars. Certainly a lot of interest in this one lately, so there's one to keep an eye on. And then finally, videos run long enough, so I'll just cover one trade idea that stood out to me today. And it's a follow-up for a trade idea I highlighted back in late December. I highlighted this one as a breakout above this 194 level, and from there, and I did a few follow-ups. Again, you can just click on the symbol tag and you can see the previous updates. 37% gain one day up to that point. And by the next day, we went up about 150% from the breakout point. Had an area of consolidation right there, a little flagging type action. Went all the way up from, let's see, from our breakout point. If I can grab that 194 level again, this one rallied about 400%. And at the time, I said, this stock, it still looks good. And I said the best thing to do with a stock like this is just trail up stops, or set a stop and let it run. And so on that one, you would have, if you had a trailing stop, or you took profits at the resistance level, you could have made as much as 400% in quick order. From there, it kind of fell off my radar, and something made me look at it today. But it pulled back a perfect back test of that 266. Remember, that was my first target from back here before the breakout above 194. That was the first target then. It was resistance, and this is TA 101. It's a great example. A pullback, you bought a pullback to support. If you did that, unfortunately it was not on my radar at the time, or I would have pointed out to you guys. It rallied from that point about another 384%. Where are we at now? Well, we're at resistance. There's some, it's not very solid resistance, but I can see a divergent high right here. Just like at the bottom we had positive divergence or bullish divergence right here at this low. Now we have negative divergence, and I'm watching this one as a potential pullback trade, and I would be targeting both this level here and or the uptrend line, whatever came first. It's around $8. I think this one will probably want to come and revisit this trend line. It's pretty well defined, and it hasn't tested that trend line in a while, so let me tighten it up there for you. It's certainly aggressive. This thing isn't a strong uptrend. I don't point that out, but I just wanted to mention that as a potential setup there, and a follow-up if anybody took it back then. Maybe just if you rode that pull back out, more power to you. It paid off, but it would have been a big drawdown. Again, that's when the market kind of collapsed right there. Okay, long video, but chock full of trade ideas. Again, something for everybody. Commodities, precious metals, crude oil, the broad market, Bitcoin, and even individual stock in there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.